me this morning is Nishil Maheshwari. Nishil, good morning. Thank you so much for being here with us on Newsline. Help us decode what is driving the market mood this morning.
Hi, morning. Morning to all your viewers. I think it is just the handover of the US. Friday, US was pretty good. Both the Nasdaq and Dow was pretty good. So we were closed on Friday. So both Thursday and Friday, the US markets have been good, and I think the handover here has been there. So that's why we are seeing basically some amount of positive opening. Let's see how long it sustains.
Okay, you seem to be a little skeptical about it sustaining these levels. What could come into play, Mr. Maheshwari? Could it be perhaps the sustained attacks by US on the Yemen Houthis, oil price rising? Are these likely to impact the Indian markets and the mood of the market this morning?
I don't think so. The oil pricing is going anywhere, basically. These are only temporary disruptions. I'm more worried about what is happening in the US. And there I continue to believe basically that every evening we find new pronouncements.
Yeah.
And that is what causes the disruption in the market.
Okay.
So, yes, I think this looks like more of a short-term bounce rather than actually a sustained buying in the market.
Okay. Mr. Maheshwari, if I can draw you into this conversation that was really raging in social media, where another market expert had also mentioned that perhaps SIPs and market investments are not the best suited for retail investors, and gold and real estate is where money should be parked. Which side of the pendulum are you on, sir? Do you think there is any merit in such arguments, or do you think the Indian investor is better off continuing with the SIP story?
So I'm a whole life basically has been on the equity side. I do not understand much of the other assets, so I would be biased in my opinion. But if you look back into history of the equity markets, I think for last 30, 35, 40 years, Indian markets have delivered around 13.5% kind of a CAGR return. So that's pretty commendable. So I would think basically this is a good time. Continue with your SIPs. No need to panic. Yes, there would be corrections, and I don't see at least for the next 2 quarters market finding its footing. But then you have to look at for the longer term if you want to invest in equities.
Okay. And within the equity basket, Mr. Maheshwari, now there have been, of course, this bloodbath that we've seen more so in the small cap and the mid cap index. And many experts out there are also exercising caution and telling retail investors that that should be one territory that you should steer clear of. Do you agree? Do you think there is a lot more risk and perhaps not as much potential reward in being with the small cap and mid cap space? And at this moment, should investors just look at either thematic stocks, which is what the AMFI data suggests, or should they look at large cap mutual funds?
So I'm saying this is a return basically of a Nifty for the last 30, 35 years. So I think even in the small caps and mid caps, I think similar kind of returns have been there, maybe slightly higher than the broader Nifty.
Right.
So what I believe is basically, yes, in the next 1 or 2 quarters, because there has been a huge amount of froth, especially on the mid cap and small cap, they might correct. But I think there is no fear basically saying that they are going to blow up or something like that. So I continue to believe there is no fear on the mid cap, small cap. Yes, in the short term, you might see higher returns in the large caps.
And so, of course, you started off by mentioning that every evening there is a new surprise that comes from the US. Have the markets not priced in all potential surprise elements from Donald Trump, whether it is tariffs, whether it is immigration, or any such? Do you think the markets are still likely to react to whatever Donald Trump announces, or is all of that already factored in, priced in?
So, as you have said, it's every day evening. So,
Yeah.
how will anybody price in that thing basically? Because there is a new pronouncement every day and it gets taken back also. So,
Right.
really, the market doesn't know basically what's really going to happen. I think April 2nd is one where he has said that from April 2nd, he'll put reciprocal tariffs across the world. So we should wait. I think a major event will pass through, and I'm not sure basically whether it will happen or not. But that is one date I'm watching for, saying that possibly some amount of semblance in the market will come back.
Okay.
So that's, I think, is a good date to put in your calendar.
All right, so April 2nd, of course, is a good day to pull in the calendar, but also April 1st, which is when the new financial year kicks in. Now, data that we've seen come out on domestic fronts right now, and even internationally for that, Master Maheshwari, we have inflation, which is now finally below RBI's threshold of 4%. We also have good numbers coming on IIP. Manufacturing is registering about 5.5% growth. Now, from April 1st, you will have the new financial year and hence the new tax regime kicking in, arguably giving Indians more money in their hands, which could sort of, kickstart this whole consumption cycle once again. So on the domestic front, what do you make of the coming financial year and all the triggers that we are seeing coming in? Do you think the worst in the markets is presumably over and there is only better news which should start to sort of start climbing up come 1st April?
So I think the worst can only be determined when you look at the hindsight, whether that was the worst or not. So I wouldn't want to hazard a guess, basically saying that the worst is over. Yes, a lot of this pain has been priced in. If you really look at it in the last 1 quarter, I think both the government as well as the RBI, so both monetary as well as fiscal side, basically they are acting very aggressively. You have seen rate cuts happening. You've seen RBI coming in and pumping in liquidity into the system. Government on its part basically has given a tax cut. So I think a lot of these things have started moving. Now it will all show up in a couple of quarters because that's the time basically it takes to transmit and show up in numbers.
Okay.
So wait up for a couple of quarters, but definitely I think things are getting better, but it will show up in numbers in a couple of quarters.
Okay, so stay put for a couple of quarters, and that is when the data will start reflecting in markets. But what about similar factors globally? So inflation in the US also finally getting hemmed in. If I remember, 2.8% is the inflation against 2.9% previously reported. So 2.8%, more chances or more headroom available for the Fed Reserve also to cut interest rates. Likewise, Indian inflation ebbing. So April 8th and 9th is when we could see a rate cut announcement by Indian industry, by the Indian Central Bank as well. Overall, for the industry, that means cost of capital goes down. The cycle of capex investments, the cycle of job creation, do you think 2025, April 1st onwards, is finally when it is likely to kick in, at least looking at the data that we have available at hand right now?
Yes, I think inflation is down definitely for India. I'm not sure about the US. I'm no expert on the US. But with these tariffs coming in, basically somewhere the pricing it has to be priced in the higher tariffs. So definitely, I think USA is going to see a higher inflation
Okay.
as we go ahead. So
Okay.
not sure whether Fed is going to cut interest rates now. I think what the market is penciling in there is in early July when another rate cut is going to happen. So
Okay.
I think the total rate cuts which they are talking about in the US is one that's happened. Another two are expected in the current calendar year. For Indian market, I definitely expect another rate cut happening in April. That will set the tone for at least a recovery happening in 2026.
Recovery in 2026 with the RBI likely to cut rates in April. All right, Mr. Maheshwari, I can't let you go without discussing gold because gold has also now crossed that historic milestone of $3,000 per ounce. Now, at this stage, even in India, gold in Delhi, for example, is trading above 89,000 rupees per 10 grams. So if you were to do this sort of trade-off between equity investments or parking some money in gold, what should be the ideal asset allocation and what should that pie look like for the average retail investor in India?
So gold to me at these prices is what stock market was, I think 5, 6 months back, basically huge amount of froth. Yes, it's a risk of market across the world given what's happening in the US. And that's why you're seeing basically the world traders piling into the gold side. But as a long-term investor, I would want to avoid gold at 91,000 and maybe look at equities basically because equities is already corrected. I think in maybe some time as the inflation interest rates ease off and there is more semblance in the market, basically you will start seeing gold coming off. So I think at these prices, it's an avoid.
avoid buying gold, but for those who are already holding gold, do you suggest they hold on to it, or is this the time to actually sell and make a killing on their investments?
So, as you know, most of the Indians basically never sell gold. I don't expect them because this is not an investment, I believe. Most of them basically buy it as an ornament and then it's for keeps. So, yes, if you have gold as an investment, I think there is a good time to take profits.
Okay. And those who have invested in digital gold, especially the sovereign gold bonds, and that has also been under the scanner now, apparently, voices from many quarters coming, Mr. Maheshwari, and talking about how the government made this grave mistake of starting a scheme like the sovereign gold bonds, and perhaps it doesn't have enough gold hedged against those who opted for this scheme. Now, what happens to government's own gold reserves, and as redemptions begin on sovereign gold bonds? Do you think the government has actually made a mistake by starting a scheme of that nature? And for those who are already invested in the sovereign gold bond scheme, is there any risk to their investments, to your mind?
No, not at all, basically. I think sovereign by itself means basically that
Government
India is
guarantee.
backing it up.
Yeah.
So there's no question of any risk there. And as far as the government is concerned, basically, I think it's a very thought through scheme. I do not see any reason for being afraid about it. So your investments are very secure.
All right. Well, let's leave it at that, Mr. Maheshwari. Thank you so much for taking time out this Monday morning.